Now that we have bitten those data bites, we will chew them through the panel discussions through the day. Pleasure to actually be moderating the first panel of the day. Ladies and gentlemen, please allow me to welcome the panelists for the day. My first panelist is the head of retail banking at ahlibank, Ms. Noora Sultan. Noora, welcome on stage. My second panelist for the day, ladies and gentlemen, please put your hands together to welcome Ramez A. Ramez is the Deputy CEO at Dhofar International Development and Investment Holding. Ramez. My third panelist is someone who's flown all the way from the UAE. He is the CEO for Mawarid Finance. Please put your hands together to welcome Mr. Rashid Al Qubaisi. Rashid. My other panelist today is the founder and CEO at BigTapp Analytics, Venkat Narayanan. Venkat. And if you thought that panel was already full, we're talking about digital, so it's lovely to have someone join us digitally. We have the pleasure of having the Chief Operating Officer for International Operations at Emirates NBD, Mr. Barid Neogi, joining us virtually from Dubai. Barid, welcome on
Hi everyone.
Panel 1.
Sorry to be digitally present. I'm sorry for not being able to travel. Anyway, thank you for being here.
Thank you. Barid, since you have joined digitally, I'm going to start the session with you. And I think the question is something that many of us always wonder. I mean, as you deal with technology-led but regulated environments around the world, and as Emirates NBD, you have been dealing with different stages of technology adoption across different markets, different types of regulations. And as someone who's actually heading operations globally, how do you think banks should be thinking about scale, efficiency, and more importantly, resilience? And this is, I have to warn you that what you're going to say is going to set the tone for a lot of discussions we're going to have through the day. So over to you there, Barid.
Yeah, thank you, Ram. I think you're putting me in a spot at the very beginning only, because yes, this topic is, okay, whatever you're asking me to say a few words on, let me see how, small I can keep it, because efficiency, your resiliency, your regulations, compliance, and on top of that, you're talking about scale. So all three are, I would say, synonymous with scale, because without all these three, you cannot have scale. So one of the major challenges that we have from a scaling perspective today is, yes, definitely regulation, because the regulatory scrutiny across all the geographies have heightened a lot. And starting from, say, for example, specific regulations, data, etc., etc. So many things that we can talk about where they are being very, scrutiny has gone quite a few levels up. That's one. Secondly, the regulators would like you to be present in those regions from a particular level of operations. Like, say, for example, there are certain things they would like you to keep it locally there. So these challenges are always there. So when banks like us are talking about scale, it is not the centralization approach or the standardization approach. That does not work anymore. So I think what we have started looking at, and maybe many other banks are doing the same thing also, is firstly start looking at efficiency. So we have to do more in the efficiencies part of it, because you have to get into your STPs, you have to get into your more digital world. So that is where more and more digital, more and more lean processes, and of course, Chetan also spoke about AI. AI is the, I think, new tool in the market. So let's see how it disrupts us. So that's going to disrupt everybody. And people are already trying their use cases all over all the banks, small scale, big scale, etc., trying to see to what extent it actually helps them. But yes, it will come in, and how quickly it will come in, that's the question. So efficiency definitely is something which impacts scaling of operations across international locations. That's your efficiency. You've got to be very efficient with all these regulation changes coming in. So one of the things that we have been thinking about is, how do you ensure that regulations are taken care of, especially in international locations where you don't belong because you are operating that particular country from somewhere else. So one of the things that we think of is design for regulation. So how do you design for regulation? So all these automated processes, the lean processes, the workflows, the systems that we are trying to bring in, we have to make sure that these STP processes, etc., take care of our regulations also. So design by regulation, so design with regulations. Whatever you design, try to design it with regulation, so that regulatory scrutiny we can easily bypass, and they will be happy with the way we are operating. So that's one of the things that we try to do. And of course, resiliency is something different. So resiliency is, the way we are looking at it is, what do we mean by resiliency today? Resiliency is to make sure that we are there, always on, always available. That is 24/7 operations. So the customer should never feel that you are not there. The bank is always available to you from whichever channels or whichever way that you would like to do. That's the resiliency that banks need to build it. And if we have to build that in, there are certain countries which are already coming up with regulations on resiliency, and they are calling it operations resiliency, and we got to be certified for that. Like UK has already come up with it, UAE is trying to come up with this, Singapore already has it, and all these countries, if you are trying to be there, you've got to be resilient and operationally resilient. And the only way you can do that is if you actually build the way, or look at the future in such a way that yes, it becomes, let me put it this way, that yes, we are 24/7 available. So that's your regulations. So now, these are we can call these adaptive scaling. Maybe the scale, we got to adapt to what is happening around us. And based on that only, we can start looking at how do you scale. So one of the few principles would be, like, we talk about global scale. So we used to have a global scale by doing what? So for example, if you take a simple example of a core bank, we used to have a simple core bank available centrally, and that is what everybody works out of. But now, with the regulations available, and the regulations, the way they are scrutinizing you, you've got to make it modular. So until and unless you are modular, from a data perspective, etc., you will not be compliant. So it becomes, so the global scale has to be rethought of to a modular scale. And modular is by country. That's the way we need to look at it. Then another one is maybe think about, so you have to balance between centralization and localization. So what is it that we can centralize and what is it that we can localize? Like there are certain functions, something like a federated model, certain functions like your compliance, risk management. No, compliance not necessarily, it's risk management, can be centralized. Whereas something like compliance cannot be centralized because local regulations are very, very strong. So you've got to localize it. However, you've got to have a governance function available from a centralized model. So that will be the federated model. That is, I have a general sort of a governance model. Say, for example, the compliance model we have in head office, but you've got to have a localized model. That is, give them the localization, give them the empowerment to do and meet the local regulations. And you can call that something like a, like I think somebody used this, like it's a global backbone with a local brain. So basically, the global expertise gives you the support, whereas the local brain takes care of the local requirements, which is more intricate and more very specific to that. So this terminology was very interesting. I liked it, so that's why I'm trying to use it. So it is the global backbone and the local brain, which really set the tone for your scaling across. Where you have center of excellences, you will have your maybe the local expertise available, and you have a centralized team who's governing you and ensuring that everything is in place. So that's the way it has looked. So the traditional models, which were always built around, say, for example, centralization, your shared and standard systems, is heavily being challenged today. And these challenges are because of, yes, you're again coming back to the same things, which is your localization requirements, your security mandates, your supervisory scrutiny, etc., So this is demanding a more flexible operating model. And that's the challenge which you are facing. So it's a shift from, you can say, a global uniformity. That is, we always wanted that, okay, we should be exactly the same. I have my policy standards here, I should have the same policy across all my countries. It's not possible anymore. So maybe you have to adapt a bit more to those local regulations and come up and see how these challenges can be met.
Got it. So, I mean, if I was to summarize what you're just saying, Barid, I mean, my 2 or 3 key interesting takeaways, as they say, you got to think global but act local. So, while risk could actually be central, compliance is local. So, you have to be sensitive to the markets you're dealing with. But there is a more important takeaway, which is very interesting, that you said that scale and efficiency go hand in hand. I mean, unless you're actually building efficiency, then your scale doesn't necessarily translate into impact, right? And driving scale is about automation. It's actually about digitization, but being adaptive to local markets. So I think that's a very interesting perspective there. Which actually takes me to you, Noora. And I'm going to take this question slightly differently, if I may. For a long time, we've always been saying that strategy leads technology. So you have to dovetail your technology strategy from your business strategy, and there is a need for alignment between what you would call as the bank's strategy and its technology roadmap, right? Now, my question to you is, how true is that statement as we stand today? And how do you see that unfolding as we move forward? I mean, as someone who's a business leader, what's your take on how things are unfolding there?
Okay, so first of all, hello everyone. Good morning. See, traditionally we've always said that strategy, that technology supports strategy, or strategy supports technology. What that used to mean is that business used to set the direction. It sets the growth goals, it sets the market positioning, customer experiences, and then it chooses the technology, implements it, so it serves and supports the strategy. And that's how it's always been. IT everywhere has always been a support function. Technology has always been an enabler. But now, as we speak, and in the current time, the question has changed. The relationship between technology and strategy has fundamentally changed. The question now, the question used to be, how would technology support my strategy? But the question now has moved to, how would my strategy evolve with what technology can bring to the table, what technology can make possible. So there always has been a very fine line between technology support or strategy supports, but that line is now blurring day by day. And how I see it in 2025 is the inverse to the statement, which is technology supports the strategy. And how so? Because As I said, the relationship is fundamentally changed now. The strategy and the technology are not aligned in one direction now. They co-evolve. They complement each other. In many of the strongest organizations around the world, technology leaders and business leaders, they work hand in hand. They work very closely. They constantly feed into each other's domains. They work on the strategy together in order to align, and that is the best way of aligning them. As I see it now, the power in the organization is not how to align strategy and technology that the traditional way that we've always used to doing it. It's how they bring them together to impact each other, to complement each other. So I think yes, it's totally changed. It is inverted completely.
Very interesting. I mean, what you're saying, Noora, I mean, if I paraphrase this slightly differently, what you're saying here is technology is influencing strategy. So, you know, banks need to look at what they will do or how they will do based on what, you know, today technology can make it possible for them to do. And therefore, you know, it's not just about thinking of you know, what I'm doing and how technology enables it, but it's actually about what is the potential out there, and that's a very important statement, because we are talking about a lot of potential that is getting unfolded, unlocked, and that's maybe a question I'm going to take from you to Ramez there, and this is, and I know Ramez, I mean, Ramez, in all fairness, he, you know, when I approached him, he said, look, Ram, I'm not a banker. And I said, that's exactly why I want you on this panel. Because, you know, as they say, Ramez has a ringside view on what's happening around. And this is actually, you know, I'm going back to the point that Noora made there, Ramez. You now see that it's not about just the bank, but about the ecosystem, right? We just saw a little while ago about how open banking is unfolding. And it's not about one player and its customer, but about a number of players coming together to make things possible. And again, borrowing from Noora, it's about what is being made possible by technology, right? So if I was to ask you as a industry leader, as someone who's actually seeing how the industry is getting you know, matured, what do you make of the ecosystem play, and how do you see this actually, you know, if you traverse the journey, how has it been so far, and where do you see this going from here?
Thank you, Ram. That's a good question. As Ram said, I'm actually an outsider looking in, so we invest in banks. We don't operate the banks. So perhaps my thoughts are more from a defensive point of view, how to defend your investment. So what I see happening with open banking, with digital banks coming, I assume, I hope, with all of disruption happening, I don't think banks can continue to operate as a standalone product factories, really. It's really all about the kind of ecosystem that you build around the bank, providing embedded finance, providing quick service to customers. So I think moving forward, the strategy really changes to the focus on that platform, on that ecosystem that you put together as a bank. You really need to look, I think, at the platform you've put in place, how easily the APIs are for fintech players to access. I know that obviously CBO has set certain standards, but from my discussions with certain technology experts, they're still wide, so there could be a little more specificity there. You also need to focus on the kind of partners you want to bring onto your ecosystem. They don't all add the same level of value. You need to focus on ones maybe that provide access to data you can't reach, that increase your ability to distribute, leverage your own strengths by using theirs. That will also need a focus on governance. You know, we're talking about sharing customer data. We're talking about onboarding people digitally. Consent management, the frameworks there are very important. So focusing on that, I think strategically would be very important, making sure you do that right. Then you have the regulations themselves. How do you ensure that the interoperability between the different systems? How can you get a fintech from the States or from Europe to come here and just simply plug into your API and immediately start operating without having to do a lot of integration, because that will make a huge difference, I think. And finally, how you manage your talent. I think you will need cross-functional groups. The focus maybe in terms of assessing KPIs is how quickly can you onboard a partner? What is the retention rate? So it's really more from, similar to the way telecoms might maybe look at it. What is the churn rate you're looking at here? What is the GMV that you're getting? I think these things are very, from what I see, it's very different from the way banks generally have managed talent in the past. I think. So I think all of these will play a big role moving forward. So in a sense, the bank really becomes more of an ecosystem. You're not talking about the bank as a standalone entity anymore. You're talking about, okay, who does the bank have within its overall network, and how quickly and easily can it provide the services that I need? If you do it right, you'll be able to provide services seamlessly very quickly. If a bank is partnered with a payment provider along with obviously merchants, it should be able to very quickly assess when working capital is needed by a merchant, when a customer is creditworthy and he can take a loan for a short term. You could probably prompt them to do that as well. So it makes your income as well varied. These are new revenue lines you're opening up. A focus will become more on the fee income aspect, on the interchange fees, rather than only on looking at it as an SNL, the typical banks of the past. So they're very interesting times. I think the disruption is coming. It will come very fast. It will come very quick. And banks that have not prepared will suffer, I think.
Well, that's an investor's view. I mean, I could clearly see you've weaved in the income angle into the conversation. I really like that. But you know what, Ramez? I mean, you said 2 or 3 things that are so very profound. The first is you actually touched about interoperability, and I think that's a fascinating comment talking about ecosystem, because you have to talk the same language that each of us can understand. I mean, if I talk Greek and you talk Latin, then we aren't talking. I think there is an interoperability that is critical. And you did talk about the income lines, which is fascinating, because we did talk about how cost to income is generally high in Oman, and clearly, driving the denominator is an easy way of bringing that down. But the third point you talked about is about customers. It's about onboarding of customers, retention of customers, and delivering what the customer eventually needs. And that I would take from you to you, Rashid. I mean, this is, and I know you've always been uni-focused when it comes to any strategy that we've worked together in the past. That you've always said, look, keep the customer in the front and middle of everything you do, right? I mean, then everything falls in place. But here we are talking about changing customer expectations. We're talking about change of ways in which customers are engaged. We're talking about, as Ramez just talked about, retention of customers where, click of a button, they could move from one bank to another. So what do you see, I mean, from a strategic perspective? What is customer service, customer experience, customer focus, and being relevant to the customer in a digital era? How do you see that changing from where it has been to where you think it will be?
Thank you, Ram. I think, first of all, thank you for having me at this
pleasure, Rashid.
excellent event. I think when we talk about our customers, usually the customers, they have very high expectations. And nobody can serve all of the customers in the same way that we look at. So it goes back to your proposition, what you want to give to those customers. Now, when you look at it as what is your added value or what is your proposition, still you need to go and check. I think the first thing is, can you do it or not? So you need to think at a high level. The regulator, is the central bank is allowing you actually to do it. I think that's very important thing first you need to touch. The second part is your reach to those customers and to identify the right products for them. For sure, you're not going to go after all of the products, all of the customers. So you have to be selective on the right products where it will give you also a return. And keeping in mind, all of us, and the bottom line is making money. And that's important. But how we make the money? By providing the best value offer for those customers. And based on that, we get maybe the best return on our investment. So when you look at your reach, we can see that there is a huge change now, shift in the technology, AI, that's been happening a lot. But still, I'll go back to the regulator. Sometimes you can see the technology is moving much faster than the regulator. The regulator have to have the right time to evaluate it, make sure that it's in the best interest for the customers, and it has to have also meeting the expectations of the regulators. So I think when we look at how we should approach our customers, we have to have those parameters in our mind. What is the value we'll give them? Is this value actually making money for us? Is it suiting is it falling under the regulator when it comes to our offering to them? And I think the last part is how we're going to use the technology. Some proposition, when we talk about products, there is no technology that you need. You're happy with what you have. You don't need to actually to go and invest more. In other areas, if you decide to offer a product or certain proposition where in the heart of that is setting the AI or technology, also you need to evaluate it again. Is it still regulated by the central bank? Is it still something that's cost effective for you? And if it's also keeping in mind, is it something that my customers would like to see? And I can hear from Chetan, I just captured one word. He said, there are still so many people are afraid of the AI. And he didn't talk about, by the way, about the customers. He talked about the staff, you know, the people and the banks. You know, so imagine if somebody in the banks is afraid of the AI, how he going to deliver to the customers to convince them this is the right approach. So I think when we look at going back our proposition, it has to be something, a win-win situation. It has to fall under the regulator umbrella for sure. It has to be cost effective. And it has to be, end of the day, cater to a specific needs of our customers. And for sure, who will deliver all of this? Yes, you might have the most wonderful technology if it's driven by AI or a normal technology, but you have to have the right team with you to be able to deliver it. I think that's when I look at the overall proposition for our customers, offering our products down the road.
Fascinating. I don't know if you've captured what Rashid said. I mean, in summary, you've actually you've answered, or rather you're imploring that we actually look at 5 questions here, Rashid. I've just noted it down. You're talking about what are you offering your customer, which is your product proposition. Where are you offering it, which is the reach. How are you delivering it, so you are compliant with regulatory requirement. Why are you doing it? So what's in it for the customer, so that you are making sure there is an answer to that question, why. Who's doing it? So you're making sure technology is inbuilt in it, and in essence, unless you have all of these in place, you obviously aren't getting it right. So there is any one of these pieces is not addressed correctly, then your customer is not going to be staying back, right? I quite love the way you just articulated it, Rashid. Thank you again for that. But embedded in all of that, and Rashid talked about proposition to the customer. Noora talked about technology alignment with strategy, and Ramez talked about the ecosystem, and Barid talked about thinking global but acting local. But the one factor that sits across all of these comments that we talked about, and the most precious element that we are all dealing with, is any prizes for guessing? Any guesses there? No prizes for guessing correctly, but we still want to have anyone answering that? What's the underlying theme that sits across all of them? Data. Thank you. There you go, Venkat. So the question is now to you, because we clearly are talking about data. Unless you have the right data and you have the right approach of dealing with the data, the right kind of business models that we're talking about, you aren't actually, going to succeed, right? So innovation, in essence, is built on the platform whose foundation is data. Now, as someone who's actually driving a lot of these, being, in the thick of data and analytics innovation, what do you see the change that you are seeing in the next gen models, and how do you see that unfolding and truly impacting, innovation as we are dealing with a digital AI era?
Thanks, Ram. So I'm going to use a very technical term to describe this, right? So the way I see it is that in the next-gen banks, the decision intelligence is going to be the operating system that drives the bank, okay? So it's essentially three things have to come together. One is governed data, second is real-time signals, and third is explainable AI. So these three are going to come together and are going to impact every act or every decision that happens in the bank, okay? Both in terms of any interaction, any risk-related decision, and ops, okay? To explain by giving some examples, right? Take hyper-personalization. And people have been talking about hyper-personalization for a long time. But what's going to be the difference in the next-gen bank? So to start off by looking at banks have to move away from selling products. It's about what I call as moments of truth. Looking at a particular interaction or a particular moment, what is happening at the customer's activities, okay? How do I come up with a moment of truth-based offer? And I'm not going to give it only using my own channels, but with a broader ecosystem, okay? So Chetan was talking about, how Lulu can become a financial provider with the support of open finance framework and open banking framework, how you can go beyond your channels to have an extended ecosystem, okay? So that's one example. Another example could be around, let's say, on the risk and balance sheet agility. I would call it as a balance sheet agility, right? How the bank can, on almost a real-time basis, revalidate the credit risk, rescore the credit risk, okay, as well as the deposit rates, okay, and the early warning indicators that you can see from not only within the bank's own data ecosystem, but also the broader external data ecosystem to continuously calibrate the risk, deposit pricing, and thereby have a better utilization of your risk-weighted assets and resilience of your net interest margins. Okay. Probably to add one more, I would say, there was discussion about cost-to-income ratios and cost to serve and so on. So GenAI pilots are going to reduce the cost to serve from both back office and middle office part, okay? So utilizing them well will improve your cost-to-income ratios, where obviously with the human in the loop at the right time, by using the co-pilots, you're able to reduce the cost to serve, okay? And more importantly, as things become more and more digital, there is going to be risk in fraud, risk, okay? So how do you combine, graph data with the, graph analytics to identify risk and fraud in real time will become another core differentiator.
Interesting. So, I mean, and that goes back to the governance of data and governed data, that comment you made. And being real time actually makes you agile and makes you respond. But I think there's a phrase that you use, which is explainable AI. So you actually are answerable eventually to not only your regulator, but also to your customer. Very interesting comments there, Venkat. Thanks for that. I will be opening up to the audience for questions. And before I did that, I have a rapid fire round, if I may, with all the panelists here. You're just given 1 minute, lady and gentlemen, and I'll start with you, Ramez. And the same question, by the way, for others. And you can't repeat what your predecessor said. And Barid, this time we're going to go last with you. So you will actually again be put on the spot there. All right, so I'm going to start with you, Ramez. If you had to be making one big, bold prediction from where you are on how business leadership, banking leadership, or strategy is likely to fundamentally change, evolve, grow, mature. You want to choose the verb, your choice. But if there was going to be one big change that you would foresee, what would that be?
Well, I mean, we've already said that I think the banking is moving more towards an ecosystem or a platform kind of approach rather than a standalone bank. So I think with respect to the bank leadership, my main prediction would be that the focus of the leadership will be on that ecosystem rather than on historically being focused on products, operations internally. It's how you manage the ecosystem, how you manage the partners, how you put them together, getting the right teams, reorganizing the teams, cross-functional teams such that you can deliver rapidly. Obviously, you need to incentivize your teams differently to do that. And finally, I would say focus on data, as we were just saying. I mean, proper utilization of data is what allows all of this to happen. However, if you don't do that right, if people don't trust your use of that data, then the whole system falls down, doesn't it? So making sure the data is protected, that the standards for sharing data are clear, and that your customers understand this. But the focus will be on the ecosystem.
Focus is on the ecosystem. Ramez, I have to tell you, being the first to speak, you've taken away a lot of points from others. Yeah. But yes, Noora, now I'll go to you next. What would your one big bold prediction on evolving, perspectives or focus of leadership and strategy be?
Okay, if I had to first say, give you a statement, I think in general, but specifically banking leadership will be shifting from performance management to leading transformation, I think. The future of banking, I think, will be shaped by, like you said, again, because you already covered most of it, but it will be shaped by technology, data, and customer trust. Leaders will no longer only have to focus on the financial results. They will also have to know how the AI and the automation and the digital ecosystems, how will they help us to serve our customers better and to do our business in a more efficient way. One thing that keeps coming in my mind, that strategy and technology are no longer two different roads. They're one highway, and the leader who can drive both of them efficiently, that's what's going to define the future.
Brilliant, Noora.
Yeah.
So you're saying a good leader is not the one who just runs the bank, but one who can change the bank.
Transform. Yes.
Transform the bank. Lovely, thank you. Rashid?
What I see, I think it's good news down the road. I think maybe in the couple of years going ahead, we will have we will not be having so much talk about the AI. By that time, I think everybody adapted to it. Everybody know how to use it, and actually will create better human being using the AI. And by doing that, I think maybe in so many industries will start using, better equipped human being that they're using the AI to open more doors for those organizations. So we can see more expansion happen by the organizations, because now they have the right tool to support their humans. So what I mean by that, to give you an example, maybe we'll see some of them maybe a better setup of branches. We've talked about the physical branches. We'll see more of a smart branch managed by smart people who are using the AI to attract more business. And this will actually lead to a bigger business, a bigger opportunity, by not allowing also some of who are ahead of us to take that opportunity. I'll just maybe give an example. When Chetan was presenting, like for example, one of the biggest bank, Revolut, who is coming to Oman and is coming to other GCC countries. So they see there is a huge opportunity. Only if the local banks or the banks, domestic banks who are within those countries start to adapt much earlier to the AI technology and the technology as well, then they will have to capture that opportunity before the others to lead. That's what I see down the road, basically.
So when you say better, you're saying things will evolve to become broader and deeper in the way you're engaging with customers. And I think that's very interesting. You also mentioned that 2 years from now, we are not going to talk about, AI as much as we're doing today. Things will have become business as usual. It's about what you do with it. Thank you, Rashid. Venkat?
Okay, if I may be bold, I will say by 2030, banks will be led as AI-governed decision factories. Okay, so boards will look at decision velocity, which is essentially the speed by which once an event happens, you collect the data around it, derive an insight out of it, and decide on what you want to do. That, with obviously governed AI models, will be seen as a strategic asset, again, if I'm going to be bold, along with your capital and liquidity. So some capital allocation can actually happen from products to these decision factories.
Wow, that is indeed bold, isn't it? I mean, Venkat is talking about banks becoming AI-governed decision factories. I quite like that phrase there, Venkat. The speed and agility with which you are making decisions is going to be the differentiator. That's fascinating. Barid, I promise I'll come last to you. Now you actually have left with, people have taken away ecosystems and leading transformations. We're talking about breadth and depth of offerings. And here Venkat actually talked about AI-governed decision factories. What's your big, bold prediction on how things are likely to evolve from a leadership standpoint?
I think the only thing that I can do now is try and merge all this together and come up with something.
Not allowed.
So I think if I can use terms like, so the future leaders would be something like architects of systems, or maybe let me call it architects of adaptive systems, if I can use that term. I think that will be a good way to look at it. So architects of adaptive systems. By that, what do we mean? See, the future leaders will have to understand technology, will have to understand operations, will have to understand regulations, and that's the way they'll have to adapt themselves. And if they're not, they cannot lead. So that's one area very clear. So they have to be in a position to integrate technology, operations, regulations, etc. So that's one thing for sure. That's why, from that perspective, they're architects. Then they'll have to build organizations that are more resilient. So they'll have to get resiliency. So organizations, so people come to play. So the skill sets of the people come into play, because the entire skill set will differ. I think Rashid was talking about that. The skills of the people in future cannot be the same skills that we employ today. So that differ. So the leaders will have to be ensuring that the teams start progressing, they are trained, they are brought up to level to understand AI, to understand digital, to understand generative AIs, etc., etc. And lastly, they'll have to lead, the leadership will have to be data-driven. So a little bit coming and copying from what Venkat was saying, that is data-driven transparency. That's very important, because I got to be transparent, because more and more your central banks and the regulators are asking for transparency. They want to be sure that the banks are transparent in what they're selling, how they're selling, and why they're selling. So that data-driven transparency is very important. And together with it comes the governance discipline. And just to add to what Venkat was saying, maybe in the future, the metrics for measuring, these leaders will concentrate differently on the metrics for measuring. So they won't be measuring, say, for example, volumes of transactions anymore. Maybe they'll be measuring percentage of digitized process, percentage of STP process, rather than trying to see what was my volume. Because volume can be taken care of. I don't have to think of people, how many people I need to transact. For that particular volume. Rather, I have to know, okay, is my systems resilient enough to give me a percentage of process? It could be, say, for example, time to market for new products. So how quickly am I getting my product into the market to make sure that I am competitive? It could be, say, for example, what can I say? Okay, compliance. Someone spoke about compliance. So from a compliance perspective, so how many exceptions am I getting per X number of transactions, maybe 1,000, maybe 100, maybe 200. That could be a metrics rather than number of errors that
it's not about the size of transaction volume, but it's about the ease, the quality of digitization, the degree of compliance, And I think the point you made is a very important point, and especially, we talked about that in the Oman market. The skill sets for tomorrow's banking and being future ready is actually about investing in people who actually are being quote unquote AI and digital ready, right? I think that's an interesting comment there. Thank you for that, Barid. With
And
that,
yes. One last comment. I think you've got to be careful about cloud cost versus per transaction cost. Also the AI integration, implementation cost, infrastructure cost versus your transaction cost per transaction.
Got it.
So the AI from a perspective might give you a lot of, leverage from a cost efficiency and perspective, but bringing the AI in from a technology perspective, infra perspective is very costly. So the margin we got to be careful about.
So you're dealing with the different cost structures than what you are currently, engaging with. Yeah, that's a very important point as well. Well, I will open up to the audience for questions. We have time for 2 questions. I see a lady's hand up there. Can someone give her a mic? If you may introduce yourself, ma'am.
Thank you so much for the insightful session. This is Dr. Fatin Zarjali from Bank Dhofar. I would like to ask Mr. Venkat. He did mention automated or AI function on early warning signs. Suppose I am a bank and I am investing on this early warning sign system to identify a customer that, not worthy of credit worthiness, not worthy of that credit. So in your opinion, when should I deploy this particular decision? In the beginning, before I disperse the credit, or during the livelihood of that financing that I have dispersed already? The model itself, when I build it, it's going to be based on historical data. So my worry is maybe sometimes I may not give a good establishment or a good financing because I just missed it because I'm based on historical data. Maybe it's a good sector maybe it's the next banana republic. And if it's during the livelihood of the financing, then I'm already in it. So what kind of decision can the bank do when he actually discovers it? I'm just intrigued on that. Thank you.
Sure. Thanks for the question. So if I understood you correctly, you're talking about based on the real-time signals, if the credit quality is deteriorating, what kind of a decision I can take. Is that correct? Yeah. Okay, so there are a few aspects of this, right? First of all, this early warning indicators are to be monitored on a continuous basis, right? So first time is when your initial credit decisioning is done. And sometime even between the initial credit decisioning and the subsequent dispersal itself, things can change. To give a practical example, we were working with one of the banks in India. So they had this concept of instant approval of a loan when a customer is in one of the shops trying to buy a product. Let's say they're buying a TV or a fridge, and they wanted to give an instant loan approval. But then the bank also implemented a system between the time the approval is given and the time the product is actually shipped to the customer. Can I do a extended open source based intelligence to see whether are there any other risk indicators with which I can potentially cancel the credit decision? Okay. Then when it comes to corporate and other long-term credit cycles, your early warning indicators will tell you that there is a potential deterioration. Now, when do you act depends on a multitude of factors. For example, what is your current exposure? What is at risk? Okay, and the major advantage in this kind of a system is the telemetry, the data that is getting collected is humongous. So which means the AI models are able to learn as to what time we should act to reduce the risk to the bank. Okay. So bottom line is it's not a single answer to say when you need to act. It's going to depend on multiple factors, including what is your exposure at that point in time, what is your risk appetite, etc., to decide what should be your action.
Any other questions? Well, if there are no other questions, really appreciate very insightful tone-setting panel discussion for the day. Thank you, lady and gentlemen, for joining us. Can we have a round of applause to this panel, please?